Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news retailers worldwide are now on eggshells, waiting to see how hard consumers pull back in the face of the supply chain induced inflation surge. But first, it is Memorial Day in the US, and they're still on holiday. They're using the break to ponder their ridiculous obsession with guns. Away from there, financial markets seem upbeat. Asian equity markets ended yesterday booking stellar gains mostly. Overnight, European equity markets were mostly quite positive, and that was despite peaky consumer inflation data. Perhaps the better business mood relates to signs that Shanghai is moving towards reopening its city and its region after a 2-month lockdown. A pickup in global demand and tighter supply is seeing the oil price rise sharply. But supply chain pressures don't seem to be easing, and maybe in fact be getting worse with the China reopening. Japanese consumers are waiting months for appliances that they once took for granted, and that is all to do with supply chain snafus around computer chips. In Europe, German inflation is surging, principally from energy costs, but food is up sharply too. They're on the economic front line of the war in Ukraine. CPI inflation is up 7.9% in May, rising from 7.4% in April. This is their highest since the 1973 oil shock and well above what was expected. These surges, undoubtedly felt across the whole EU, is denting consumer sentiment in a significant way. But interestingly, businesses are looking past the immediate impacts and haven't joined the consumers in their depressive fog yet. Back in the US, Fed officials are out softening up financial markets for a set of more 50 basis point rate hikes. High inflation is a scourge for retail demand. Around the world, retailers are bracing for consumer resistance to higher prices, and the impact could get very depressive in the next month or two. Costs are forcing prices up right now. Higher prices are keeping consumers wary, and the risk of sharp falls in retail volumes is very real very soon. The fight against inflation seems urgent. The US Treasury 10-year yield will start today unchanged at 2.74% while the US remains on holiday. And the price of gold is also unchanged today at $1,854 an ounce. But oil prices are very much higher from this time yesterday, up $2 to just under $116 a barrel in the US, while the international Brent price is now just over $117.50 a barrel. It hit $120 earlier in the day. And the Kiwi dollar will open today firm at 65.6 US cents. Against the Australian dollar, we're at 91.1 Australian cents, and against the euro, we're at 60.8 euro cents. That all means our trade-weighted index starts today at 72.1 and firming. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.